So now that we have some understanding on how to establish our background, we're going to look at all the small time frame entry signals. We're going to sort of run through the list at reversal points, right? So if price is moving down and we have our reason to look to buy, I'm going to run through the different opportunities. Now, they are categorized as aggressive, and eventually as we go through and price moves along and gives us more information, there are more conservative, patient, wait a little bit entries that can come up. That can be higher probability because you have a little more information than an early aggressive entry. And basically just to remember the idea that the aggressive entries that we're going to see are more appropriate if you're getting with a trend that's a healthy trend. So again, if you're in a downtrend and the lower prices have not seen high volume, you're going to continue to look for that trend to continue, and looking to sell on a retracement is more likely. That is more makes more sense that you'd be a little more aggressive on the entry rather than waiting for multiple 1-hour candles. That you would take these more aggressive entries going with a trend that's healthy. And again, if you're going against the trend, it's better to give it a little more time and get a little more information, take some of these later entries. Okay, just had to establish that clearly. So now let's look at our 5-minute chart example here. And let's say, we're looking to go long. Our 1-hour analysis, our tools, maybe this is a fib level or a previous resistance turn support and pivot, right? We're not talking about that here. So, but of course, I always like at least one piece of, technical analysis besides VSA and hone in on those levels. So, again, as we've seen, the smaller time frames should agree that there's strength coming in. If we're looking to buy, this is an uptrend, a pullback, right? We want to see that strength come in, ideally at the key level. Now, the first opportunity, right, that shows up, very simply, the VSA entry is a no supply. And we've already seen that, no supply, no demand examples. So that would be considered an aggressive early entry. Now, again, it's down candle appearing after strength, a down candle with volume lower than the previous two on that candle, and then moving above the high or closing above the high is your entry. So again, that pattern of strength pulling away from the bottom, we're not testing for it at support. We're pulling away and we get a no supply. You can even, again, to help clarify things, you might even want to draw a box over pins that may appear there and know that you want to be above that strong buy area on your low volume test signal. If you're going to revisit this area, again, this is a little more particular to my style of VSA, and what I've observed is, again, I'd want to see sustained buying if we continue down here, but we'll get to that. So that's the first example, the first aggressive entry. If I'm going with a healthy trend, I got a couple of points of confluence, I see this, I'm taking the trade. Very simple. Now, if I have, this support, just to talk about stop loss, since we're talking about entry, allow for the fake break. So if price were to come down here, double bottom, and fake breakout, right? How many examples do we see this? Almost every day you're going to find it somewhere in the chart through the time frames. You don't want to put your stop a pip or two below a bottom. But what does that mean? 5 or 10 pips below. It's not hard to eyeball the fake breakouts. Again, in the last video, there was a fake break over 618, and I think that was like 5 or 8 pips or something. So, or not even. So you're looking at 5 to 10 pips, and you can eyeball it, just based on the size of things, and we can actually draw that in once we get through the different examples. So 5 to 10 pips, general rule I use here to make sure I can survive a double bottom and slight overshoot fake break before it moves up in my favor. If that's a large pip count, we can also draw a fib from this low to high and use a 618. But let's just move on from this point. Okay. So first entry opportunity. Now, automatic rally, right? We talked about that. Same principle here. Now, what I want to highlight is that maybe 8 or 9 out of 10 times you can actually predict where the automatic rally is going to be, right? So let's say price is moving up here. We've had one aggressive entry opportunity so far, and we finally get our first level of support after of resistance. I still say those things backwards. First level of resistance after strength. It was previous support in this case. So it's not hard to predict where that's going to be. It's either going to be often there. You have your 50 and 14 EMAs as potential areas, right? 5-minute chart. It could be an upward trend line. It could be a fib retracement from this high to low. You get the point. It's like they want to test for sellers at an obvious place that could attract sellers. Previous support becomes resistance, so they'll test there. 50 EMA acts as support resistance, right? So that could be a place to test. So you'll very often see that, and you'll know the test when you see it. So I won't get into dwelling on that. Let's run through the entry signals. So now let's say on this test, and I do want to mention this, we're seeing volume and we're observing this off the high here. If we had high volume up there, that's telling us on the test for sellers at a key level that may attract sellers, ideally, that there was a lot of sell activity. This is really making the setup much less probability, and I would not, look to enter this trade based on the fact that this weakness is the same volume, nice and high like the buy volume, and that's not what we want to see on a rejection. Higher prices attracted sellers at a previous support to resistance, right? Or even just wherever that automatic rally sets up, higher prices attracted high volume and moving down as a result, right? So that's weakness, and that still represents a large entity, smart money selling. So to point out that when that automatic rally forms, medium, slight increase is acceptable and usual, but really comparing to that, we don't want to see a lot. So going forward now, we have that information that the automatic rally is a healthy one, we could say, one that's in our favor without showing a lot of sell activity. Generally, higher volume in these lower areas, lower volume at the higher areas, and we have our bullish environment intact. So let's make this, because it very often happens, a double bottom. Now again, in my particular way, I'm not looking for a no supply here. Now this is a traditional VSA entry that you can look for a no supply here. But for me, the higher probability is if I see continued buying, right? Sustained buying, as we say. Now let's make it a fake breakout. Doesn't hit our stop if we're in early. Fake breakout. And of course, when is that confirmed? When it comes back into range. So it breaks out, and you really need to see that buy activity come up. Now this is a typical picture here. Just comparing all the important stuff. This is saying, great, time to look for the long. This is saying, okay, healthy. Now, usually this volume is not going to be as high as the initial strength, but you do want to see an increase over the recent range if you're seeing it prices below this point, because of course we want to see that lower prices are continuing to attract buyers. Okay, now after that has occurred, we've had, since this initial aggressive entry, we had this information telling us we're still in a healthy environment, and we had this information telling us we're still in a healthy environment, buying. So let's say a no supply appears in the same price area, just for this example, to prove my point. This is a better trade than this one. Same price, but we've gotten more information. So again, if we're talking about a downtrend that's been going on for a while, that's now just starting to hit climactic volume on a 1-hour chart, you want to give it some time to get that 1-hour close and then a bullish reaction to really confirm that strength. We're talking about 2 hours. Now we're on a 5-minute chart. We got to kill 2 hours here before we really are properly looking to go against the trend, right? So again, that can be, we're talking about now getting into the less aggressive entries and things that are more reasonable counter trend, right? So giving it that time and saying, okay, at this point we've had, strength, climactic volume on a down move confirmed, with stopping volume on our down move on our 1 hour, talking about the 1-hour chart, and a bullish reaction. And then maybe at that point you get your no supply, and you also see that you have good information here. So that's a much more conservative entry, giving it that time, getting that more information. Okay. So again, we're just generally talking about no supply signals as we after strength. And again, no supply after strength, or generally in this area as we pull away from the low. It could range around and then give a no supply, right? So really just a general thing here. By definition, seeing that no supply, volume lower than previous two, and then the move above for entry. Now, let's move on. Now, I'm going to show a no supply again, but on this one, it's occurring at our automatic rally, which is a common trade for me. I like the combination of the no supply, because we're testing for sellers here. This is a little more, you could say, random price area. This is our clear, established already, and now a second test of AR, test an area to test for sellers. So again, that buy activity is more active down here, and as it slows and slows, if you were a smart money buyer, you'd want to pause your activity and see what's up with the sellers, right? Because really, once they dry up, there's nothing to stop you from marking it up. But if they're very active, you may have a situation to deal with, right? Talking about that balance of supply and demand, and when they pounce, when the sellers have dried up. So this is a nice place to test for sellers, and very often to get your no supply, right? So a no supply confirmation would be price moving above the no supply candle. And in this case, we end up with a combination, the combo, no supply, push through, automatic rally. So once this closes up here, we have two reasons in one to enter the trade there. If there's a no supply here, and you may see, if there's not a no supply by definition, you know, we're understanding what's going on here, which is volume should be lower as it pauses here, just generally lowering and then leading to a break. That's reasonable to say, okay, we did test for sellers. They weren't very active, and then also the push through is there too. But I'm trying to now sort of highlight that. I've given you the technical definition of a no supply and no demand, but I want you to understand it. And if you have, you know, very low volume here, but one's not lower than the previous two in the right spot, but they're all, you know, showing you on a test for sellers that the volume is low, you know, you can take that information for what it is. And you can say that's confirming the situation. Now, again, push through is another entry opportunity. So we showed a no supply because that happens a lot, but let's just get rid of it. Let's say it doesn't happen. And we simply just come to this point and we close above. So this is the entry that I call the push through automatic rally. It's also could be called effort to rise, right? And again, this marks the switch over from accumulation and buying into down moves to now going to market up. So that very important point, the automatic rally, as we know. So this stuff, you know, applying to this 5 minute. Now, again, the entry is here, and it's got to close at or near the high without high volume. So again, just to give you that sense of what's not good. Breaking resistance, higher volume, higher prices, right? And let's say it closes off the high with a pin and you know, maybe a bearish reaction, or even without the reaction. Closing off the high with a pin on high volume as you break a resistance tells you what? Higher prices are attracting some sellers. So again, if we're going to enter here, and if I saw something really bad, just talk about that. Let's say I'm in earlier and I'm up 15 pips or whatever, right? Because I got in one of these areas and it's pushing through and I see that weakness come in. I'm going to lock break even. I'm not going to be silly here and say, well, doesn't look so good, but whatever, you know. If selling comes in here, I could take a little profit off and lock break even, you know. I can talk more about managing trades, but that's the point. We're using this information, you know. So let's make it a proper, nice-looking push through or effort to rise, push through AR. Then I put on medium volume. A slight increase is acceptable. And again, when I say these slight increases, we're talking about recent range and compared to the buying. It should not be as high as the buying activity here as we push through. So you get a reference here. Something like this is very common, what we're looking at right there. Maybe there's a slight increase, but it's okay really compared to that stuff. Now, we've gone through no supply entries, and we've gone through the push-through automatic rally, closing at or near the high without high volume as our entry there. And we're again, logically, why? Because that area that may be attracting sellers got broken. We didn't see sell activity come in, and we're switching over from our range of accumulation into trying to mark up price now. And off of a lack of selling, with strength shown in the background, good probability to try to trend upwards now. Okay. This will all make perfect sense here. The buying and selling pushes the price around. Smart money is smart. And we are tracking them. Now, low volume test of automatic rally after the break. And again, that could be by definition a no supply. So here's a very common picture of what you might see. Volume lower than previous two. Down candle, could be right in there, testing this level. And then to confirm our no supply right there, we're moving up above the high of it, right? So there would be our entry. So we have our entry, 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 entry. Okay. Now, this, again, like I said, we want our low volume test. This is something that they like to do is test this level one last time. Maybe at least half the time, 50% of the time that you push through an automatic rally, you will come back to test it. So again, if you're being a little more cautious, a little more patient on your entries, that could be something you want to look for. If you're waiting for your 1 hour, two candle pattern of strength, in this case, to happen, and these candles to close, you may have that, that condition where you want to wait, and this is something that could show up for you. So break, test continuation of AR, low volume test. And as I said, it doesn't have to be volume lower than previous two. If you want to take the information that price moved down here, maybe it sat there for 5, 10, 15 minutes on some very low volume and starts to pull away now, and you get a nice bullish candle. We understand what's going on there. It's the low volume test, and now they're continuing there. And we see the imbalance of supply and demand really showing up at that key level. The lack of supply and the demand is high there. So, of course, it's in their best interest to mark price up after they've positioned long, and lack of selling and test for sellers that don't show much activity tells them, let's push it up, go for another leg, until those higher prices start attracting sellers, right? All very logical. So there's another entry there. It could be a no supply or just a general low volume test, and we start to pull away. So there's that. Now we're in our markup. Even from our smaller 5-minute point of view, in this pattern, we know we're in our markup. And as we're trending here, we can look for no supply entries. Let's say it's healthy move. There's not weakness coming in. The higher prices are not attracting climactic volume. I'll draw sort of a realistic picture of what you would want to see on volume. It's medium. It's healthy. You're expecting that it can trend. There's enough activity. But the higher price there is not attracting high volume, telling you sellers are coming in. And then you can get another no supply, a little pullback, no supply, and an entry. Again, as long as you don't see climactic, or volume sticking out at the high price, no supply entry. Okay, so you're pulling away from here and you're starting your trend, or you're starting to go with the trend that pulled back. The larger time frame trend could be up, and this is your pullback into a fib, right, or previous, resistance, support, and pivots, right? So now you're beginning to go and trend again. If it was a reversal, now you're beginning the trend, the uptrend after the downtrend finished. So this is your trend start, and you don't want to get in too late. Things tend to zigzag. So as I say, I don't like to chase price. If it's moved up a good amount, I'm not looking to buy. Period, because I know that price does this. So no supply as it moves and moves and moves. Get a little more risky, right? So we're basically looking for, after the automatic rally, maybe another the first no supply here. Then we're starting to push it, the later ones. Another thing to remember is you're probably going to be running into something. There could be resistance, whatever it may be there, and you don't want to maybe take a no supply right into a resistance area. Again, just probabilities and using our tools. If there's a resistance, it may attract sellers, a fake breakout, and start attracting some sellers at a resistance. Very simple. So I don't like buying in general, as a general rule, into areas that could be problematic. So we're nice and low when we're talking about this stuff. Plenty of room to the upside. So I don't like to chase it late. I don't like to buy into a resistance or the previous day's high or unseen territory that may attract selling, to new fresh ground. We don't know what's lurking up there as far as higher prices attracting sellers, right? So sooner the better. Again, if it's a little later, then I tend to wait for the fib retracements, even on the 5-minute chart or the 1 hour chart to see how things are behaving. And my box there. Maybe you get a fib retracement and, fresh buying come in, in a no supply entry, whatever. So as we move along, I tend to not take those tiny pullbacks and looking for more of a retracement. So now I've seen this level, right? I've seen that there's not a lot of selling. So when buyers step in, I'm not buying into an area that's, who knows. We just revisited it and we didn't see a lot of selling, right? So you see the logic there? But that pretty much covers what I wanted to show here as far as entries. Aggressive to more conservative, might be waiting for 1 hour confirmation, so this is too early. If you're going counter trend, again, if you're going with a nice healthy trend on a pullback, that's more reasonable to go in earlier. And as you start to trend, you're getting your no supply entries still, but you don't want to go too late because you could be running into resistance. Things tend to zigzag, and you can look more for fib retracements and strength coming in, and then a no supply. And you can also apply this method basically on a retracement, right? You can get an automatic rally, a double bottom at 618. So you start to see these tools just pile up, and you're just constantly using them, whenever you can. As I say with fibs, it's hard to overdo fibs. A swing is a swing. And if you want to measure the retracement, you can. It could be on a 5-minute chart, 1 hour, 4 hour. You can have, it doesn't mean I have 10 fibs on my chart. Usually there's 2, 3, whatever's in play at the moment. And just drawing, a couple of boxes here and there. So, looking for areas of confluence on pullbacks. Eventually, if you've already started marking up and you don't want to chase it, previous resistance turn support, things like that. Looking for those pullbacks and reaccumulation, right? Okay. So that covers it for this video, and we will move on.